everybody. Hello, good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com. And today is Wednesday, ladies and gentlemen. I want to welcome you to our Markets Talk webinar, which we will start in a few seconds because this is a video preview for the webinar where we're going to talk markets. We're going to talk about the US inflation number. We're going to pick up on the trade truce which we got. So yes, all about this and a little bit more in the webinar, which is happening now. So stay tuned. Hopefully you'll enjoy the session, and I'll see you in a bit. Ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. Let me fix my camera here a little bit. There we go. Lift it slightly higher. I want to welcome you. I want to welcome you to this Wednesday's morning session where we're going to have a look at the markets. We're going to have a look at what's happening in the world to kind of try to understand the whole madness. Before we jump any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I'm also just going to quickly put the usual good morning in the chat room. Good morning, everyone. There we go. As always, ladies and gentlemen, I keep on saying this session is meant for us to communicate. If you have any questions, honestly, throw them at me and I'll see if I can answer those, of course. If I can answer those, I will answer. If I don't know how to answer, then I will not answer. Anyway, for now, I would say that Markets.com website. There we go. Ladies and gentlemen, almost forgot about that. Look, just a quick mention. You can always check it out. Feel free to visit us here. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, now then, let's have a look what's happening in the stock market. Look, Nikkei 225 seeing some positivity here, mainly due from the end of the negotiations between China and US. I'll get to that in a bit. But yes, we're seeing a nice move here to the upside. Look, the chart is a little bit on the messy side, but I really still like all of these lines, and I'm still kind of keeping an eye on them. For example, the downside scenario, yes, it still is intact. I mean, the same scenario is in play. I need to see a drop somewhere below the 37,350 territory in order to consider lower levels. At the same time, we could drop below the all the EMAs on the daily chart, and then we could go from there. We could aim for some of these lower levels, and of course, so on and so on. But certainly, the upside scenario right now is the one that I'm watching. However, I have to say, and I have to admit that the upside scenario could be a little bit limited here. Again, this is all because of this downside line taken from the highest point of July of 2024. And this downside line, I do understand it's a little bit on the tentative side. However, I'm still keeping an eye on it. First barrier, of course, will be the 38,770 zone, somewhere around here, marked near the highest point of May. But if that, like I said, if that gets cleared, yes, the downside line is the one to watch. If we clear the downside line, now that's where the maybe more bulls could join in, and we could then target some of the other important areas of resistance, which for example could be somewhere around here, the 40,280 zone, or maybe even this 40,620. Who knows? But that's the highest point of January, and basically the current highest point of this year. Look, it would be quite interesting to see if we could create a new all-time high I'm looking at the US indices, and those seem to be willing to move, but let's not rush into things, okay? China 50 is enjoying the moment as well. It's pushing nicely to the upside. Again, like I said, because we got the trade. I don't know what even to. We got the trade truce or the trade ceasefire. The temporary ceasefire between China and the U.S. Again, look, they made some agreements, right? I mean, they. Oh, let me kind of read out the wording on this one, because this is really really interesting. So basically, China pledged to speed up shipments of rare earth metals critical to the U.S. and auto and defense industries, of course. And Washington kind of decided that that they're gonna ease some of the export controls. So basically, we will allow some of the goods from which are needed to China, are in China from the U.S., like jet engines and maybe chips. Who knows? The semiconductor chips. Who knows that? But again, that could be an interesting moment. Like I said, maybe not the top chips, but could be something a little bit better. Anyway, so yeah, like I said, it's very vague. Yes, the market is reacting positively to all that stuff. However, we all understand that it's a temporary fix in a way, right? So we're not really fixing totally the everything, but it's we're putting a little band-aid, here on the wound, which is really bleeding, to be honest. And I don't know, the little plaster, will not really help out much, in my opinion, until we get some sort of we jump into some new. I'm full of metaphors, like we're jumping into new waters of, accusations. There we go. I think I need to write something like, anyway, look, my problem here is that with the market, looking at the market, yes, it's a good positive thing here. In a way, I think that this has helped the stock market from not driving lower and giving some sort of hope. So basically, the whole negotiation kind of spiraled around the fact that we will continue talking, right? But let's not forget that there will be. I'm not even saying might be. I'm saying will be an accusation thrown probably at China, because again, so far, that's how it was. We'll see some sort of like a commentary or a post in one of the social platforms, and we'll have another round of kind of attacks on each other. I think that this is the reality that we're living in right now, so I think we need to kind of get used to it. So yes, Dow Jones Industrial Average, looking at this picture here, look at this. It is nice, it is beautiful, it is near a key area of resistance, which is roughly around the 42,850 zone. That's also could be seen as a neckline of an inverted head and shoulders pattern, which I can continue to make emphasis on. Which I continue to make emphasis on. If we can get that nice clearance, then yes, I will go for that psychological 44,000 zone. If we can get that move, amazing, more buyers could join in. Now, in terms of the downside, I would like to see a drop below the EMAs here on my daily chart. At the same time, maybe like a drop below the 41,000, kind of 770, or the 41,800 zone. I think that's the one that we could be watching. So if we get a nice drop below that, I will consider a move to the downside. S&P 500, so yeah, also pushing nicely higher. And in a way, we're not really far from the all-time high, so why not to end up testing it? And I talked about this last week. I said to you that I will get comfortable with the upside if we do push above this 5,973 territory, or even better, the 6,000 zone. And there we go, we got that push. So now we're targeting that 6,147 level on the cash index, basically the current all-time high. NASDAQ 100 is also trying to still make its way higher. So far, so good. We're not far from the all-time high, and I think that this is something that the market is really, really hoping for. And I said to you before, and I'll say it again, Whenever we were, clearing this area, I said that look, I'm gonna still target the upside, and potentially we could reach that all-time high. We're getting very, very close to that. So let's see how this is going to play out. Now, in terms of economic data, and this is the US dollar here that I'm watching. In terms of economic data today, of course, everybody's watching the US CPIs. The US CPIs, the headline inflation number is expected to come out at 2.5 against the 2.3 previous. I'm talking about the year-on-year number. The same core is expected to tick up by 0.1% from 2.8 to 2.9. Look, okay, that's absolutely fine. That's all good. We're expecting, higher inflation. This is going to be an important data set because again, it's a somewhat of an indicator of how, when the whole trade war started with all these tariffs. Excuse me. When all these tariffs started, what kind of effect it had on the economy. So again, maybe the little expectation for a little hike is on the inflation is because when all the trade tariff talks started and were kind of thrown out, maybe this is where retailers kind of started ramping up a little bit prices, to the upside, and just in order to kind of withstand any potential economic shocks. That's where, like I said, that's where maybe this inflation could come in. Also, some of the organizations probably have slowed down their shipments because they didn't know what kind of policies there will be. If if there will be, they will have to pay more when the goods arrive. By the time the goods arrive, you have a new legislation, and you basically then need to maybe pay extra tariffs, which you cannot afford. So that's where, like I said, that's where the confusion could be, and because people are thinking that maybe actually everybody started buying more because they wanted to cover. Some did, yes, to cover, let's say, to cover themselves and to buy more goods at cheaper prices. But some, again, like I said, some probably were worried and they didn't know what to do, because it's like you don't want to jump into the action if you think that maybe there could be like devastating effects after that. So you just, yes, you might lose out on something, but maybe the losing out on something is actually better than losing out totally. So that's what I'm saying. Long story short, for now, we're watching the numbers carefully. If the numbers come out on the higher side, we could see a move higher. But look, I think that we could see a move higher on the US dollar if we do push above the 2.9 and above the 2.5, because this recent up move right now to the upside it seems like it could have been priced in already, and maybe, just maybe, this move up here is already exactly that, that what we were looking at. So long story short, at the moment, like I said, the index, if you're looking at this one, remains still below the downside line taken from the highest point of February. So I would say I'm still looking at the downside scenario, and if we do get a nice drop below the 98.65 territory right here, I'm going to lean a little bit more towards the downside. For the upside for me, I need to see a push not only above this downside line, but also a push above the 100.40 zone. And at the same time, we could see a clearance of the 50-day EMA, and then we could take it from there. Let's jump into, by the way, so apart from the other data from the US, I think that something that people need to watch out for is going to be the MBA 30-year mortgage rate. Now in the US, and now previously last week it came out at 6.92. The previous number was at 6.98, so we had a little bit of a drop. What I was saying last week, I said that if this is somehow going to climb to 7, I mean, that like a symbolic number, I think that this is where the market participants could start getting worried, and so far the number is getting held on the lower side. But let's not forget that today we have the 10-year note auction in the US. Yesterday, I think we had the 3-year note action, yes, and then Thursday we will be getting the 30-year bond auction. Now, this is probably something that the market is going to be very, very carefully monitoring. Apart from the US PPIs, of course, but yeah, PPIs are one thing, but the 30-year bond auction, I think that this is where where investors will be very, very careful about their risk appetite as well. So, look, long story short, for now, jumping back into the US dollar, I'm still cautiously bearish, but I need that confirmation drop again below the 98.65 zone, and then we'll take it from there. The German index DAX, let's have a look at this one. So we created a new all-time high last week in a way, right here, but as you can see, the 61.8 here on the Fibonacci extension is still providing strong resistance. So in order for me to go higher, I need to see at least another push above the above this territory, above this 24,000 kind of 300 zone, and if we can get that move, I will go further north. I will go for that maybe 25,000 eventually, but again, let's see. But at the moment, yes, we have drifted lower, but we're holding above the 23,923-24 zone. Now, if we do somehow stay above this, then there is still a chance for the bulls to step in and push this one higher. However, if we start falling below this, I'll consider a larger correction to the downside, and then we'll go from there. Let's jump into the FTSE 100 very quickly. Where's that FTSE? What's happening here? Continues to push higher. Everything's really good. So we're approaching the all-time high. So hey, I think that the FTSE could do it. So let's see if it can do it this week. Let's jump into the Forex world, ladies and gentlemen. AUDUSD, so far so good. Also waiting for the US inflation number. So if you are trading something US dollar related, just kind of be careful, be cautious right now, and I'm not really rushing into things. This formation here could be something of a rising wedge, but rising channel maybe, but again, it's not really like that kind of that clear that it's a rising wedge, or looks more like a rising channel. So at the moment, like I said, I'm not really touching this one, apart from the fact I'm loving the fact that it kind of remains positive because it kind of cleared all my EMAs here on the daily chart, but we remained above the as long as we stay above the 0.65 territory, I'm going to continue targeting the upside. AUDJPY, by my beloved risk on, risk off monitor tool, it's showing that we're in risk on environment right now, in a risk on environment. So basically everybody's buying equities, everybody's buying something more risky, and which are considered equities, and everybody's loving the kind of the somewhat of a positive, somewhat of a positive news coming out from the trade negotiations. Either way, look, ladies and gentlemen, for now, looking at this technical picture, I will say I'm going to continue targeting the upside, and I'll aim for the 200-day EMA or even this 95.74 territory, and then we'll go from there. NZD, USD, so good push above this barrier, the 0.6028-29 zone. We remain above it so far, and as long as we stay above it, I'm going to continue targeting the upside. USDJPY very quickly. USDJPY, it's we rebounded, that's great. However, we are still below the downside line. So in a way, I don't want to rush into things here. As long as if this downside line remains intact, I will continue targeting the downside, exactly as the arrows are shown here. First, I'll aim for the 142 zone, and if that gets cleared, the next target is the 139.57, and then we'll go from there. For the upside, a break above the 146.28 zone is needed in order for me to go higher. USDCAD. USDCAD is an interesting spot. I talked about this last week, and I said to you, look, this upside line, watch it. And there we go. This upside line is taken from the lowest point of December of 2023. And so far, so good. We're holding nicely here. And look, maybe, again, it's very, in a way, it's a little bit on the tentative side. Depends on how you're going to draw it. Maybe we need to draw it this way. it's not like, honestly, it's not like really exact science here, but in a way we're always monitoring the area around a certain level or a certain line. And I keep on I keep on stressing this, and I keep on trying to tell everybody, look, you're aiming not for the level, exact level. You're aiming for the area near that level. And there we go. We're testing this upside line for now. Will continue targeting the upside, but again, this upside is very short term, and it's basically classed as a temporary correction, or could be a temporary correction before another possible leg of selling. Basically, the way this upside line curve here goes. And if we do rebound from this lower side, or not the lower side, from this upside line, then yes, I'm going to consider a move towards this downside line. If we break this upside line, and we also clear, and actually let me just grab this line, and we clear the current lowest point of June near the 1.3634 zone, yep, that's from where I'm going to consider a move lower. USDCHF, it's at an interesting spot here as well. And look, in a way, like I said, for me, it's very clear and straightforward. I need to see a drop below the 0.8156 territory in order to consider a move lower. For the upside, I need to see a push above the 0.8347, and at the same time, we could break this downside line. If we can break that downside line, this is from where I'm gonna get even more positive. Now then, EURUSD. Looking at this one as well, we're flirting with the lower side of the rising channel, although I said to you last week that it's not very clear and the most exciting rising channel, but nevertheless we can keep an eye on it. So keep your eyes on today's US CPIs. If those come out on the higher side, maybe this could help the US dollar to drift a little bit more to the upside, potentially bringing EURUSD to the downside. EUROJPY, we are at a very interesting spot, and we are testing the upper side of the rising wedge pattern. So according to all the TA rules, according to all the technical analysis rules, rising wedges tend to be a negative indicator, showing basically the potential breakout to the downside. However, I keep on saying, and I want to continue saying this, that while we remain inside the pattern, the trend remains to the upside. So there we go. For now, we are keeping an eye on this upper side of the rising wedge. If it remains intact, we could see a little bit of a retracement back to the downside. Let's jump into GBPUSD very quickly. So this one's an interesting one. It seems like we're starting to move sideways. We're now kind of in a little range here between the 1.3434 and the 1.3593 zones. Let me just grab one of these. Yep, there we go. So if we do continue to trade between these two areas, I am just kind of staying around here and just watching this one. If we start breaking the 1.3434 territory right here, well, that's then the idea of considering a larger correction back down, because maybe the pair will also form something of a double top pattern. Now let's jump into the commodity world, ladies and gentlemen. Gold, there we go, beautiful push back up. Look, I talked about gold recently, and I also threw out this idea here on TradingView. You can check it out, but basically what I was saying is that yes, I'm still somewhat positive because we remain above the upper side of this falling channel, which we broke to the upside here. Then we traveled higher. Then this upside line failed to provide good support. We cleared it. We dropped lower, but then still the upper side of the falling channel still remains, as a good area of support. So as long as we stay like this, then there is a good chance for this one to push back up. However, I would prefer to wait for a push somewhere above this 3,383 382 zone, and then we'll go from there. Silver had a great run, and up until kind of Tuesday. On Tuesday it reversed back down a little bit, so I think it's a good time for a little bit of a correction here. In terms of how much we could correct, well, let's refer to my beloved Fibonacci here, drawn from the lowest point of May to the current highest point of June. So it seems like we could be traveling towards the 23.6 here on the Fibonacci retracement. So again, this one's drawn from the lowest point of May to the current highest point of June. And yep, let's see if this is going to work out. Palladium, okay, doing not bad, to be honest. I mean, it's all fine. Platinum, it is just beautifully pushing nicely to the up. I mean, from the end of May, gaining 20% straight away, boom, that is just spectacular. Honestly, yeah, it's I cannot say anything else. Looking at the this here, the monthly chart, we're traveling towards the highest point of February, and that is basically near the 1,330 kind of 7 zone. So we'll see how that plays out. Let's not rush into things. I mean, for now, if you've missed this, what can I say? I wouldn't chase this right now. I mean, it could still go higher. Don't get me wrong. I'm targeting the 1,337 territory, but I don't want to. Like I said, if I missed it, I missed it. I have to admit, I was bullish, but I kind of missed this moment here. Copper still holding on. So the China-US talks are not really driving this one higher yet, because although it should. Maybe that's why, maybe because the market doesn't see this as a good plan, good deal, and yeah, that's what we're getting right now. Although overall we're still bullish, but some confirmation breaks are required, especially here on the upside, above the push above the 4.96 territory, or even better, maybe that psychological 5 level could be nice. And then we'll go from there. WTI oil, look at this beautiful move to the upside, beautiful test of this downside line. I talked about this, and I said to you yesterday, or sorry, yesterday I did a piece here on where's that? Yeah, where is that? Oil. Anyway, where was the recent oil I did? Let me just refresh the. There we go. That's the one. I didn't refresh it yet. Anyway, so basically the video that I did here on TradingView, you can check it out. I talked a lot about oil, and yep, so far so good. It is working out nicely here. We held nicely below this downside line, so for now there is a chance for this one to drift back to the downside. Unless it starts breaking the downside line. If it breaks the downside line, I will, yes, consider a move higher. Let's jump into natural gas. Still stuck here. We're stuck. Well, actually, this 3.74, it was a good level. I think now it's time to change it a little bit. Yep, I think we need to change it, and I think that this 3.83 is the barrier that I am watching. If we can break that one, that would be spectacular. That would be spectacular for the bulls. I think that this could open the door to some higher areas. Let's have a look at coffee. What's happening with coffee? A bit of a rebound, a little bit of a mess, to be honest. Remove all the drawings. I think the EMAs are the better indicators of here, you know, how to play this game. A drop below the 200-day EMA could open the door to some lower areas. For the upside, a push above the 50-day EMAs could, yeah, open the door to some higher areas. This one, a drop below the 200-day EMA, lower areas, a push above the 50-day EMA, higher areas. But with the higher areas, you have to be very careful and cautious because of this downside line, which could slow down the acceleration. Just a quick glance of what's happening with wheat. There's nothing major. Sugar continues to slide. Cotton, my beloved cotton, is oscillating, but eventually maybe this could play out nicely. And like finally for dessert, as always, Bitcoin and other cryptos. Bitcoin, look, beautiful move, beautiful reversal from this from last week here, when we reached the area slightly above the psychological 100 zone, and we started pushing back up here. So from this reversal, we're almost gaining that 10%. We're examining the all-time high, the 112 territory, 112,000 zone. So if that gets cleared, as I said before, I will continue aiming for the upside. I will aim for 121, if I'm not mistaken. That's what I was looking at. Let me just double check. So I'm applying my Fibonacci extension here, and yes, so 121, 122 territory, that's what I'm going to aim for on Bitcoin if we do clear the current 112,000 all-time high. Cancel. Bitcoin Cash continues to move nicely to the upside. There we go, beautiful move, boom. Approaching this 458 territory. Let's see if we can clear that one. Ethereum is there we go. We are drifting through the 2,700, 2,000 kind of 800 zone, or actually something like that. That area is still providing good resistance, but 2,786, we're clearing that one. I talked about Ethereum here back in, yes, June 3rd of June. So I talked about this. I said to you, keep your eyes on this, and we could see a little bit of a retracement here. We did that. Now let's see if we can, stay above this highlighted zone. If we can stay above the highlighted zone, I will continue targeting the upside. Ripple very quickly pushed higher, broke the falling channel. So far so good. I talked about this a lot as well, and I mentioned this for now we're above all my EMAs on the daily chart. In a way, everything's pointing a little bit more towards the upside. Litecoin clearing the upper side of the falling channel, potentially opening the door to some higher areas, but we need a clear move above all the EMAs on my daily chart here. Dogecoin, they're pushing higher, but still stuck in between these two trend lines, so I'm not really doing much. I'm just observing the price action and waiting for a clearance. Let me just put this one right here. Also, Polkadot is at an interesting spot, and we have rebounded here, just slightly below this 3.79 territory, and we're rebounded. We're now testing the 50-day EMA, so as long as we can get a nice push above the 50-day EMA and with 100, we'll treat every EMA as a barrier, a good barrier, and if we can clear those, great. I will go for some higher levels. And finally, Tron, there we go, pushing to the upside. So far so good. I said to you last week that if we do clear the 0.2786 territory, I'm leaning towards the upside, towards the psychological 0.30 zone, and then we'll take it from there. Ladies and gentlemen, I hope you found this useful. I tried to do this one as quick as possible in order to cover many instruments in this session. Look, I hope you found it useful. Thank you very much for watching and listening. I really appreciate your time, ladies and gentlemen, your views, your likes, your comments, everything. So let me know in the comments what you think. I mean, I tried to go a little bit quicker. If you want me to cover a certain instrument, please always message me, drop the comment in the box, and then I can do that for you. But for now, if this was enough, thank you very much. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you on Friday, 7 o'clock GMT time. Bye for now.